All right. Hello, everybody. Welcome back to another episode of The Market Close. We are live, and we have got a lot of different headlines that are going on back and forth. In about 20 minutes, we will have Jason on for the show, and we will get into Technical Tuesday, and we'll get all of his updates on what's going on from a technical perspective. But we've had some interesting markets. We were going relatively green until, honestly, the last 20 minutes, and then we started going red again. I mean, we flipped green for a very quick second on the S&P 500. Certain names did go green, but now, as you can see, the S&P 500 right there, 661.32. We are back down for the day. The lowest we got to on the day, at least during the market open, was 655.86. So it is nice to see that you're getting a little bit of reprieve. At one point, we got to 665 on the day, but it looks like we are going to end out red. At one point, we were down 1.5%. Now we are down 1.6 or 0.63% on the day. I did do some buying. I opened up the wallets, did some buying. Did not do any buying yesterday. Did very little buying last week. I did some buying, very, very small nibbles on three names. NBIS, Amazon, and the next one that everyone's going to love or hate at the same time, good old BMNR. Very, very small nibbles on these three, but after they bounce just a little bit, and maybe that bounce is fake, maybe those are going to be dead cat bounces. We're going to see how that plays out, but have been waiting for a while on BMNR. I mean, quite frankly, been waiting a month on that. NBIS been waiting since 97 until it really got much lower than that. And then Amazon kind of just gave back the entire freaking earnings move. I mean, I was buying Amazon at 214, 212, had a nice little jump and got to 255, and now it gave it all back today. So those are three of the names, gave a little bit of a nibble on. Let me know if anyone bought anything in the chat. I mean, you had some names get a big rebound. Meta went from 583. I did not pick up Meta at 583, so I did not catch that bottom, but now that's at 601. We'll see if 583 ends up actually being the bottom, but 601, nice recovery. Meta did have some news today about them not being ruled an illegal monopoly from a U.S. court. So that was one of the good headlines for Meta. But then overall, the entire market started rebounding, and that was good for Meta in and of itself. SOFI above 25, but still stuck below 27. Google right there, 285. We have some big updates on Gemini that we'll talk about. NVIDIA, unfortunately, could not really break through back into the green. Bounced from 179, has not really touched 179, now at 182. We'll talk more about the updates with NVIDIA and Microsoft investing in Anthropic, because that was another big headline today. And then Microsoft right there, 494. That one bounced off 486. Can't believe it even went to 486. Wow, I did not see that. 494, still down 2.5% on the day. So that is what we've got across the board in this market. Again, it doesn't look like we're going to end out green, but it's not the complete bloodbath that it was in the morning. And that goes back to this idea of the choppiness of the markets. The market's waiting for a little bit of security from NVIDIA earnings. We do have some government data that we got an update from. We are going to be getting PPI in about 5 days. So we were supposed to get it tomorrow, but it now says we are getting it. Let me pull this up in a second. On November 25th, so actually a little bit longer than 5 days, in about a week. And then U.S. import and export price indices for September will be released December 3rd. So PPI for September, November 25th, U.S. import export price indices on December 3rd for September. So we are going to get a lot more data. We did get that jobless claims last night, which was super important. 232,000 jobs that filed for unemployment, or people that filed for unemployment. As you can see, the Fed probabilities are back above 51%, which means at least it's better than where it was yesterday at 41. So I think that, along with a little bit of calmness around the AI trade, started getting the market to warm up a little bit. But in no way or shape are we out of the woods. It just seems like maybe it's not as absolutely horrible as it was early in the morning. I didn't buy Google today, but goodness, Sundar is making me want to buy Google at basically all-time highs. Gemini 3 is absolutely incredible. There's a lot of things to look at, but here is their release video from Google AI Studio, and it's pretty much getting universal praise across the board.
Vibe coding in AI Studio with Gemini 3 lets you build anything. Build entirely new experiences. Create apps that see. Make tools that listen. Build apps with a single prompt. Get inspired.
Tell me what you want to do.
refine, and refine some more.
Right now.
Share with a friend, and remix. Then share with the world.
It's pretty incredible, some of the things that they're showing off. I mean, I didn't get through all the examples, but some of the ones I saw today are just kind of crazy. I mean, this person right here said, I asked Gemini 3 Pro to create a 3D Lego editor. In one shot, it nailed the UI, complex spatial logic, and all the functionality. And there's a lot of more examples that were uploaded today. So what is the takeaway from this outside of like unbelievably bullish Google and just like the praise that Sundar deserves for getting Gemini 3 out there? I think it's AI is real. Like what you're seeing on the screen is only possible because of AI. So maybe a little bit of a reminder to the entire market that AI is a very real thing. It's not a fad or it's not fake. And that you need a lot of data center compute, GPUs, et cetera, TPUs. Gemini 3 was trained on a lot of Google TPUs to be able to make this thing a reality. These are the benchmarks right here. Gemini 3 Pro is beating pretty much everything. I mean, even Elon had to comment and say how surprised he was by the level of success that Gemini 3 is deploying. And again, all of that comes through this integrated ecosystem of the data centers, the compute, the GPUs, the power that's necessary for all of those data centers to make sense, the cloud computing. Like this stuff all goes in tandem with each other, which is why we've seen this entire industry start becoming a massive investing opportunity. And the other person that understands how big of a deal it is are the Saudis. US government is planning to approve the sale of chips to the Saudi AI venture Humane. Humane is a subsidiary of the public investment fund in Saudi Arabia that has lots of money to be able to invest in all of these chip-based companies and build out more data centers. Remember, NVIDIA's guidance does not include China and it does not include the Middle East. So that could be the upside surprise if this does get approved. We're probably not going to get approved for China, but if we do get approved in terms of the chip companies with NVIDIA and AMD for the Middle East, then obviously that would be bullish. Here's what the Saudi prince said today. We're thinking of increasing our investment from 600 billion to 1 trillion in the United States.
Today it's a very important time in our history because there's also a lot of things that we're working in the future. We believe in the future of America. We believe in what you're doing, Mr. President, is really creating a lot of good things and good foundation to create more economic growth, more business in America. And it will also your work for the world peace. I believe, Mr. President, today and tomorrow we're going to announce that we are going to increase that 600 billion to almost $1 trillion of investment, real investment and real opportunity by details in many areas. And the agreement that we are signing today in many areas in technology, in AI, in materials, magnet, etc. That will create a lot of investment opportunities.
So you are doing that now. You're saying to me now that the 600 billion will be 1 trillion.
Definitely, because what we are signing to facilitate that. And
I like that very much. No, that's great. I appreciate that.
By the way, you know how Trump just slapped him on the knee? In Saudi Arabia, if you touch the prince, you can go to jail for a long time. So yeah, you're not really supposed to touch the prince, but I guess if you're the president, that's okay.
Great. We're doing numbers that nobody's ever done. And in all fairness, if you didn't see potential in the U.S., you wouldn't be doing it.
Definitely.
You don't want to lose money.
As you said, Mr. President, it's the most hottest country in the planet. But what you're creating is not about opportunity today. It's about also long-term opportunity in America that will affect American economy positively in the next coming decades, preparing the right foundation of emerging technologies. That's a game changer for America in a good way, and we want to be part of it.
Yeah.
Again, at its core, is the $1 trillion investment good for the United States? Obviously, is it good for the AI sector? Yes. But what is the takeaway from that story and the Google story? The Google Gemini 3 story is like, oh my goodness, there are models that are becoming better and better and better. They are getting integrated through every part of our life. And we're not going to go back to a world where there's not AI. The takeaway from the Saudi prince is that they understand, in terms of, at least in the context of Saudi Arabia, that they cannot rely on oil money for the next 10 years. And the prince has been very vocal about the idea that he thinks that previous leadership in Saudi Arabia was way too focused on something that is inevitably going to die out in terms of oil. And they have to get ready for life in 2050 versus life in 2025. And that requires massive amounts of investment. And so as a result of all that investment, obviously that money is going to come into the Microns of the world, the AMDs of the world, the NVIDIAs of the world. The question becomes, can the market move past this hiccup of navigating what they're feeling is a sentiment shift in the market? Now, either it's a sentiment shift, which is the best case scenario for all of us because sentiment will potentially shift to the positive side, or it's a structural shift. And if it is a structural shift, then obviously there's more downside to come. I personally don't believe it's a structural shift. I think all the evidence we see every single day is less about it being a structural shift unless we get into a recession, which is another question. But if it's not, then this is more sentiment that everyone kind of has to navigate with. Also, you know, I was kind of thinking about it today. When you really look at it, August, we were supposed to crash, but we went higher. September, we were supposed to crash, but we went higher. October, although it's supposed to be an Uptober month, we ended up having some choppiness, but we still ended 2.5% up for the month. So November, we're now down 4%. I know a lot of us are down more than 4%, but at least on the S&P 500, it's down 4%. At its core, it feels like this pullback, and I hate to say this, and everyone's going to hate me saying this, is healthy. And I know no one wants to hear that, but we were green 6 months in a row. The idea that we're taking a 4% pullback in November, I mean, that's just not something that to me means that it's a bubble that now has to pop. And I know that's what the bears are sort of like screaming, but does that make sense to be mad that we're down 4% after having 6 months in a row of green? I mean, people are saying get ready for 2022.0 where everything collapses, the NASDAQ goes down 40%. Even if we get a 10% move, so another 6% down from here, that puts us at 6,200. I think, and I think a lot of people would agree with this, even if they would hate to admit it, it is way healthier to be 6,200 at the end of November on the S&P for the overall market, which means a lot of stocks probably have a lot more down to go, than to moonshot up to 7,200. And I know it would be really fun to be like Tuesday, November 18th, 7,200, boom, S&P above 7,000, but it wouldn't be real, right? Like it wouldn't be based on any logic. It would just be a lot of euphoria, just be a lot of hype. You wouldn't get any of the froth or excess leverage out of the system, which has obviously started to leave the system, especially in the crypto markets, especially in a lot of the stocks that don't have any earnings. And so as much as it sucks to go through, and it obviously is painful, it's not the end all be all if it is not a structural decline in the concept of the bull market, which, you know, it could be. I just disagree with that assumption, but it's rather something that we all have to deal with. And I think that's not the craziest idea. I mean, quite frankly, again, if we were at 73, 7,400, like that's just begging for an epic collapse versus, hey, let's not get crazy. I mean, we got pretty close. We got to 6,890. You know, we were less than 1% away. Took a bit of a breather. Maybe we have to take more of a breather, allowing valuation multiples to compress, allowing the market to digest a lot of the earnings that have happened. And then we can get ready for the next leg up if the earnings can justify that, which, you know, as much as this sucks, I don't think it's crazy to imagine that would take the case. 62 S&P 500 means no growth. Yeah, it would be hard to imagine we get there. But if we do, I just think a lot of stocks would look very attractive because that would be eliminating the majority of the year's gains. And again, at that point, you got to ask yourself, all right, well, why do these stocks deserve to be here? And if they don't deserve to be here, those would be opportunities I think the market cares about. Tuesday, November 18th, 4 p.m. Thank you, everybody, for being here. The stock market is now closed. All right, we are done for the day. Definitely still a red day, 660.17 on the S&P, which means we were down about 0.82%, almost 1%. BMNR actually held up a bit, up 4.5% on the day. NBIS 5.3. NBIS got to 92.50 at one point. Amazon got all the way up to 227, closed at 222. Took off 4% on Amazon. Microsoft got a big downgrade as well. That also got the street a little upset. Fell to 46, now at 493, down 2.7%. The other big news of the day, for those that missed it, is Anthropic is getting an investment from Microsoft and NVIDIA of up to about $15 billion collectively. And Anthropic's going to be buying $30 billion of compute from Azure as of today's announcement. And that brings up questions of the circular stuff. We'll talk more about that in a bit, but that was also a very big announcement today. And quite frankly, I think that announcement came out because Google's Gemini 3.0 came out, and you know, Microsoft, Anthropic, NVIDIA kind of wanted to make sure that people understood that GPUs are still important from NVIDIA, not just Google's TPUs. And Anthropic, you know, wanted to give a lot of publicity to their model, not just on Gemini. So I think it made sense, the timing of this announcement in the context of Gemini 3.0. It's healthy competition across all the model companies. Cloudflare right there, down about 3% on the day. That one did have a shutdown throughout the entire morning, and that's why a lot of websites weren't working. PayPal actually, did it fall below 60? Did not fall below 60, but closed 2% on the day. Palantir right there was down about 2.29%, falling another 0.3% after hours. Hoodie did get to 116. Hood closed at 114.30. The Qs, 596, down about 1.2% after hours as well. Lilly did make a new all-time high, or pretty much got there. 1,040, 52-week high, 1,030, up 0.85% on the day. So you saw some of the healthcare and defensives get the rotation out of tech, and that tech rotation has been happening for the better part of 2 weeks right now. S&P 500, 659 after hours. The Epstein bill did pass 427 to 1. That happened 427 to 1 in the House. It's now going to the Senate to continue getting a vote. Representative Clay Higgins was the one person who didn't vote for it, which is kind of embarrassing. I mean, if everyone votes for it and you're the one guy who doesn't, you start getting a lot of questions on why. But nonetheless, he was the one person who didn't vote for it. And now it goes to the Senate. And if it gets approved in the Senate, we should be getting somewhat of these files released over the coming days. VIX ended up 7.42% of the day, 2404 on the VIX, as that one ended up going green for the day. Another big headline. So outside of the Google Gemini news and the Anthropic stuff, you had this headline, which kind of went under the radar, given all the other AI stuff we had today. But I mean, it's a real thing, folks. Deputy White House Chief of Staff said the administration is considering options to send millions of Americans $2,000 dividend payments funded by tariff revenues without congressional approval, according to Bloomberg. I don't know how they're going to do it, but I guess they're going to do it. And the fact that they're looking to do it without congressional approval, again, Congress has the power of the purse. I don't know how the heck they're going to do that, but they're trying to. And so it looks like these stimmy checks, I mean, I don't know if they're coming, but the White House is definitely thinking that they're going to find a way to get them to get out there. Aswath, he was on CNBC. Let's listen to what he had to say. Curious about what people's thoughts are for his analysis. Again, he did a big podcast over the weekend, got a lot of different views, basically saying we are officially in a bubble. Here he is confirming that argument and explaining his logic for why he thinks we're in a bubble. Jason should be on in about 5 to 10 minutes, and then we will get into Technical Tuesday.
But how do you know we're overvalued? It's easy for people to say, yes, this is a bubble. Based on what?
Based on the fact that people are throwing money at investing without really telling me where the money is going to come back from those investments. Starting with, Sam Altman, when he's asked about how does OpenAI expect to make money? Blowing off that answer without giving me a business sense of OpenAI. What I get are companies like Oracle, like Meta, like Microsoft, like OpenAI throwing insane amounts of money to building AI architecture without providing any tangible. I mean, I don't even want evidence. At least give me a story of how all this investment is going to play off in terms of products and services on which you can make money.
My quick response to that is, I'm not saying Sam Altman had the best answer, and I know there's a lot of confusion over how these companies are going to monetize, but to say that there is absolutely no understanding of the business model, how they're going to generate revenue. I mean, if you listen to the OpenAI CFO at the Wall Street Journal conference, I listened to the entire 40-minute keynote she gave a week ago. I mean, she introduced a lot of different business models outside of just consumer subscription and advertising. I know Sam Altman did not have the best response there, but to use that response and say, well, there is no way in hell they're going to be able to build a big business off of this, therefore everything is fake. I don't know. It just feels a little misguided based on all the different things that they have. They could still fail, but I don't know if his answer is the number one reason for why OpenAI is done.
Agree with that downgrade today of Amazon and Microsoft, at least in the narration around it, which is we can't do the trust us anymore. You got to show me now. We gave you the benefit of the doubt. We drove your stock prices up. And now it's like, okay, we need some tangible answers on where all this money is going. But what if we can't get those for a while? We may be faced with months, if not years, before we know.
And that's the reason going from overvaluation to deciding to sell short is a bridge that's too far for me. Clearly, AI is overvalued, but if you ask me, is it overpriced? That's a different question. That's about catalysts and corrections. And you're right, that moment of reckoning might take days, it might take weeks, it might take months. I mean, remember, Alan Greenspan warned about irrational exuberance in November of 1996. The correction itself did not happen till 2000. So you could be waiting a long time for that catalyst and correction. So even though we might accept that that AI is overvalued, I'm not sure what the immediate follow-up is going to be for you as an investor, other than not to pour in all of your money into these AI stocks, because that's asking for trouble.
I think it's interesting when I look at your notes to our producers that you think NVIDIA is going to beat, right? I mean, I think everybody agrees that they're going to beat, but that the stock price is likely to go down. Why do you think that?
Because I think markets expect you to, I mean, the expectations game is a strange one. If you keep beating analyst expectations by 15% every quarter, and you beat them by only 10% per market, that's a negative surprise. And I think increasingly, as these companies have become better and better at beating the analyst forecast of numbers, markets are building that in to their expectations. So I'm actually arguing that this is a second set of expectations out there that we don't observe, which is what's driving the market. So that would be my prediction. They'll beat analyst expectations, but they won't beat market expectations.
Is there a stock in the group, whether it's NVIDIA or another, that garners the most attention or the most caution, do you think?
I think the more a company spends, the more caution is called for. So I would just take the AI spending of each of these companies, now outside of NVIDIA, and the more spending they have, the more cautious I get, which is one reason it might, if you're planning to buy one of the Mag 7 stocks, it's not a great time to buy any of them. I would say buy Apple, because it's the most cautious of these companies. And this is a time where caution might actually be the byword for which of these companies will walk out of these with the least damage.
Apple's trading at 40 times earnings and not really growing as fast as the other companies. The other companies are trading at cheaper multiples and growing faster, but he is so mad about the CapEx spend that his argument is buy Apple instead. And that goes to show the kind of divergence in thinking between some parts of the street and other parts that just feel this CapEx is unrealistic. It makes no sense. It is not justified, enough to the point that you'd buy a company that is way more expensive than Meta, Amazon, or Google, and it's not growing as fast just because they're not spending that much on CapEx.
That's so funny. You know, this company was so criticized. We've mentioned this several times over the last week for being behind and not going all in like the others. And now we've had this market upset and all this volatility. And we're like, well, Apple looks great compared to the others who aren't spending as much. Let me finish with this last question. The debt raises that we've seen among the hyperscalers and these so-called circular deals. What do you make of all that?
No. I'll take the circular deals first. To me, it's a sign that they're worried. They're worried that the entire AI, the infrastructure bit could be put at risk if there's a disruption. I think of DeepSeek a year ago, where essentially you change the AI story by saying, maybe you don't need these chips and these huge data centers. And what I see is this preemptive setting up to prevent that from happening by making themselves the status quo. So to me, it's a sign of fear, not a sign of optimism or confidence about the future. The credit, so far, if you look at the credit as a percentage of cash flows that the big tech companies throw off, it's not, to me, troublesome. That's not where I think the catalyst would come from. But I think the smaller AI companies that are using credit are putting themselves at risk.
Now, again, Oracle credit default swaps, they're at the highest level since 2022. You've got a lot of investors buying protection because they're afraid of Oracle defaulting on their debt, which, again, I don't think that's going to happen. But nonetheless, that is the argument that the market is making. Again, Oracle was doing 12 to 15 billion of free cash flow a couple of years ago, and investors were asking, what are you going to do with that money? Are you going to give me a dividend? Are you going to buy back stock? And they ended up saying, hey, we're going to invest heavily in AI. Now they're having negative free cash flow because of all the investments and all the debt that they're taking on. But if it ends up working out, aka there is an ROI, then eventually that debt will likely be rewarded long-term with the share price. So it's really interesting to see Aswath come on live TV and say it's all a bubble, it's all fake. For those that didn't listen to his podcast over the weekend, you just heard in those 5 minutes, he's saying that you shouldn't touch any of the Mag 7s outside of Apple because Apple is somehow safe and the other ones are overspending on CapEx. And essentially what he's basically saying is the CapEx investments aren't worth it. which again begs the question when you look at what Gemini's growth is like, just even on Gemini 3.0 or the 650 million monthly active users, the cloud growth at 34%, ChatGPT at 800 million weekly active. Like when you see this type of stuff, all of it is happening because of the data center build out and because of the training. Now, you either believe in that or you don't. Aswath is obviously making the argument that none of it should be justified, and investors will punish these companies one day in the future when this all crashes for spending this much in capex. And I think that sentiment, that narrative, is permeating across the market enough to the point where he thinks buying Apple would be a better bet than Google, which is growing significantly faster than Apple. Time will tell, but it is quite incredible to kind of hear that analysis from a dean of valuations, and that is his take. And nonetheless, that take is part of the overall collective market, which is obviously discounting a lot of these different tech companies. All right, folks, let's get into Technical Tuesday. Now, real quick, let me just say I have to leave at 6:30 p.m. On the dot. It is my sister's birthday today, so I am going home to celebrate with my sister. So I absolutely have to leave at 6:30. We are not going to get to every single stock. I think today's Technical Tuesday is less about every little stock that's out there, but more about the broader trends in the market. And that's what we're going to try to get out of Jason today on the main companies and the main indices. Maybe Jason will stay on after at 6:30 if he's up for it, but if not, then I will have to get out of here. But we got a good 2 hours and we'll try to get as many stocks as we can, especially the main ones. Without further ado, let's roll the intro. What's up?
Happy birthday, sis. Is it big sis or little sis?
Big sis. She's 4 years older than me.
Big sis.
And I know I didn't tell her I'm coming back home, so it's a surprise, but she never watches my stream, so there's no way. No way she's gonna know. So I can say
Love that.
There you go. Dude, it's been a hell of a week.
Dude, it's been it's been a wild ride for sure. Hopefully everybody stays up I try to post as much updates as I can, but yeah, it's been choppy. It's been choppy for sure. Looked good for a little bit. We locked that little lower high late last week. Couldn't get over but here we are. So I think we have, from now till next Tuesday, dude, we have a lot of stuff coming. A lot of, we have two major events. So, we can get into the charts right now, but you haven't prefaced the show, or at least the segment. What do we call this? Do we call this? It's the show. So, or the segment of the show, but this is about trading. And so if you're very much into investing, first of all, I don't want to scare any investors, and I don't think any investors should be scared about this. Number one, I think there's a lot of shenanigans out there in the markets today, and people are. I look at the feed that I get on X, and I'm like, I see all kinds of crap flying around. Oh, things are it's all gonna burn, blah blah blah, right now. And first of all, it's like noise. And I'm like, this pullback. I look at the charts, and I gotta be honest. I'm like, first of all, what the hell? What pullback at the index level are we talking about? Because we're still really close to the highs. Yep. Number one, and it really hasn't been that much of a pullback at the index level. But that said, a lot of people's high flyers and heavy growth stocks, my hoodie included, or Palantir's included, have been hit pretty hard. But that kind of comes with the territory. So,
also it's a good disclaimer. If Jason says a price level on a stock, remember he's talking about it. If you're long Amazon for the next 10 years, and Jason thinks Amazon might touch 210. Please do not run for the hills and get scared and want to kill Jason, because he's a little bearish on Amazon. Because at the end of the day, this is trading, and a lot of this is short term.
Well, to be honest, to be fair, I actually bought some Amazon stock today.
Wow.
You did? Did you say you did?
I did.
Well, of all of them, I just heard the clip that you had this guy talking about, and it's a small, not even like a token piece, but when we're talking about investing, it's completely different than trading, right? And I think that you have to preface this segment with that. Trading and investing are not really compatible from a time frame perspective, right? Because your time horizon or how long you expect to have money actively moving in the market, that time horizon is completely different. So from an investment perspective, it's like, ooh, this is actually should be exciting, like from that perspective, because I might get some Black Friday deals, but I might not either. And I just want to be prepared from that perspective. And, from a trading, viewpoint, it might be a little bit different. And I don't know, I thought I was going to get a really nice dip on hoodie the other day. And I started to, and my God, dude, I've never seen Hood and Palantir are two stocks that are they're just built different. Like these dips on these two stocks, I have not seen dips get bought this fast, like these two stocks in, quite frankly, I don't even know the last time I've seen stocks get bought up this fast. But yeah, if I get that $100 sub $100 dip, I want to be ready for it. Do I get to see it? I don't really know yet. We're still holding the relative lows, but unfortunately, no, we're not at the highs right now. So, but we can get into it.
Let's start with the index because I think everyone's curious about that, and then we'll get into all the main tickers. But S&P right here is 660, down from 689 at the highs, which was about 2.5 weeks ago.
Mm-hmm.
And so we're looking at basically a 4.2% decline.
Yeah. All right. So I have the timer on the top left. I'm going to shrink it a little bit. Right now I'm starting at 5 minutes. So this is SPY. Really quick. I posted something about the SMAs, and on my screen I have the 20-day, which is white, the 50-day, which is blue, and the 200-day, which is red. And down here in purple is the 200-week simple moving average. But primarily you want to use these three. And what I will say is, if you've watched this segment for a long time, what I always talk about is the distance in between the SMAs, like the distance in between these SMAs right here. And that is and always will be the most important thing to look at. And the best entries are really when it's very tight, right? Like this is a very good entry here where the SMAs are very tight and they start to expand. So from a net new money long perspective, what's clear is that, okay, so this is very wide and we can see, hey, look, these are about to contract. That's what we can see at the moment. It always starts, by the way, with the loss of the 20-day simple moving average, which is the white one. And today is the first day that we actually did lose, or we opened below the 50-day simple moving average. So that's where we are at the moment. What I will follow this up with is that these lines, these little squiggles on my chart are kind of just that. And they're also magnets. So I don't want you to think of them like support and resistance, because that is kind of a misnomer. People get that idea, but they should not be thought of like that. They're momentum indicators. They're they're completely lagging indicators, but they will give you an idea of momentum. And what you want to look at is the slope. So right now the 20-day is starting to slope a little bit down if price does continue to go down. But also know that these are very tight together, and it's going to be a while before these two can start to cross. And what we're looking for, if things were actually going to turn kind of bearish, it's going to be a while. And what these actually do is they act as magnets. So it's very, very possible that we get this pop back up, and this 50-day simple moving average acts as a magnet, and price hugs it very closely while the 20-day catches up to it. And if for whatever reason, let's say NVIDIA comes out or non-farm payrolls come out and the trend becomes a little bit cleaner and price starts to trade above these, well, the only thing that's going to happen is that the 20-day is going to catch back up and the distance between these two is going to start to widen again. In what direction? To the upside. And that's going to happen. So it's not over till it's over. The signs are here now that, hey, look, we've stopped going up at the moment, and that is what's true. If we do continue from a momentum perspective, and what large funds are probably screaming about is that when you lose this, what happens is that you tend, when you lose something like this, is that you tend to travel towards the 200-day simple moving average. Here's another one here where you tend to travel towards the 200-day simple. Here, you tend to travel towards the 200-day simple. Pretty much nearly every time in history. It doesn't mean that you breach it, but you tend to travel towards it. Let me get back to where we are. And because this is a very steep and we'll say uncorrected slope, and the trend has, as of today, day one day doesn't make a trend. We have a lot of news coming. Basically been today broken. If it does continue, then that does, I heard you say a number earlier, that does bring you to 615 as where the 200-day simple lies. And that actually would be your dip buy, which also, by the way, kind of lines up with these prior tops over here. And that would be that typical pullback. That is not a bear market. That is completely different, right? And to be crystal clear, that is a typical pullback, and that is not a bear market. A bear market is completely below all of these SMAs, which we are very far away from. We're not even close to that. So no, we're not talking bear market. No, we have no signs of bear market. We only have signs of a typical pullback, and that is absolutely to be expected in any normal market, and that right there is actually healthy.
Do you think at all that there's an argument for the S&P 500 is topped? Like, is there a legitimate claim
from a price topped in terms of like for this week?
No, for the next year, like it's the top of the cycle. Like from a technical, maybe fundamentals are different, but does the technical say that?
You can't say that from so we're running out of time, but like the only thing here is that here's the last low, here's a high, here is a lower high that we caught last week, and we today, as of today, have breached that lower low, have breached that most recent low. Unless we're trending below 650. No, I just, you like for the next year, no way, man, no, because okay, so Amit sent me this video earlier, and I was trying to understand what his context was, but when I say typical pullback, this typical pullback will normally resolve itself like this,
right?
Like, to be fair, like that's normal. Like that's normally how this pullback will resolve itself. I mean, end of story. So no.
defending 615 is very important, but we are far away from even touching those levels.
Yeah. So this normal pullback will typically resolve itself just like this. And by the way, you guys know this kind of pattern. This is Amit's favorite pattern. We're one of his favorite patterns. He won't get his double bottom. Maybe he gets his double bottom around here, and then he gets another double bottom around here. Why shaking your head? But
no reason.
This is way before everybody else sees it, where your cup and handle is going to show up. Just so you know, you love my art skills. I mean, that wasn't bad. But quite frankly, that's how this, if you want to know how things evolve as charts, it's literally just like this. But yeah, that's a long time away, and that's how a normal chart would actually pan out. So yeah, no, this is not. To your question, it's all about your time horizon. So can it have topped out in the near? Well, I mean, if that happens, like that's going to take a while to actually play out, right? So that's like, I mean, that's a while. So the only thing, or quickly we reclaim, this is 667 and we're back on our way. So in this instance, so I have a couple lines on here, and I know we're going a little bit over, so I hope if that's okay, that's fine. Couple lines here. So red on my chart. Inside this is actually a 3-month range. So within the last 3 months, First level, that's important, 667 and a quarter or 667.30. This is a big deal right here. We really have to reclaim this, and that's going to tell us if we're able to hug that 50-day simple moving average. If we can stay at least around 667, 668, then that 50-day simple moving average is actually going to be just flattening, and it's not going to be heading downwards. Same thing with the 20-day simple. That will keep those SMAs at least flatlined. Near term, 663, which is basically just last week's low. Near term, if we can get over 663, that does give us this small little pop. This is a small chop zone, and this gives us right over here. If we do hold that, then what you would expect, just very basic price action wise, is you would expect, actually, you might even expect a bit of a bullish bounce that looks possibly a little euphoric. And I would caution that euphoria here, and just know that, hey, there is a possibility that we even do bounce here and hit about a 50% retrace of last week's range, which is going to line up to the 20-day simple moving average. Because remember, these are all going to act like magnets. And in this moment, right around this level, around 678, that's where a potential third lower high could show up. This could be what I would call in the trading world, we call this like a bit of a lifeline, anywhere in here. And we've actually done this kind of exercise many times in the past. But this is, let's say, if NVIDIA has a really good story to tell and things look good, that's actually what that would look like. And I would expect something like that to be pretty typical here, because a breakdown into a pullback is not a one-day thing typically. It is a series of events. Yeah. It doesn't happen overnight, not normally. Normally, we get a bit of a chop and there's time to make a decision. I mean chop. So quite frankly, I would expect something like this and potentially something like this. And it might even be a single day event that ends up looking like that.
Let's transition into NVIDIA then, because I think that goes hand in hand with the S&P. Right, how are you thinking of this one and its price action? The one thing I will say on NVIDIA is that we hit 212 on a really big announcement at GTC, and now we're back down to 180. One could argue that if he never said the 500 billion in 5 quarters, we would have never seen 212. So I guess how are you thinking of price action?
So NVIDIA here, this is one of our charts. If he never said, what was it?
So Jensen basically was like, the next 5 quarters, we have a $500 billion revenue opportunity. The street thought that was 380. So that was a big beat against expectations. But he said it already. So the market kind of already priced it in, right? Yeah.
So, I mean, you've been saying this a lot, and I couldn't agree more, right? Like, earnings are good. I think that's true across the board. The one caveat is that the market is always forward looking. So what's weird about the market too, and I guess this is a bit of a side note, is that the market will punish equities on bad news multiple times over, but they won't really praise equities on the same news multiple times over. So, I mean, that's the market for you. We're in NVIDIA is the exact same setup as the market from an SMA perspective. Now, SMAs are not price action. That's candlesticks, and candlesticks actually are far superior than a smoothing trend line. But right now we're still at the same level on NVIDIA, and NVIDIA's what we call point of control here. This is 177 still. That remains like the main area of interest for NVIDIA. I honestly think the best case scenario on the actual earnings, it's fairly flat. It might even pop up a little bit, but unless you're over, quite frankly, 200, and I mean like trending over 200, which is right here, it's not really going to be out of the weeds, because there is this snapshot essentially right here. From a technical perspective, is technically what we would call distributionary, meaning that this looks like more sellers than buyers. And if the buyers down here were not enough to continuously bring it higher, even over here, this trend at this point in time is actually not holding. And so if these current buyers from this zone, this is the story of this price action, if these current buyers were not enough to sustain this move in this direction to the upside and keep it going, and more buyers did not step in here to continuously push it higher, well, then quite frankly, what this story is telling me is that it probably needs to come down a little bit lower to come in and visit a little bit lower support to see if there's any more interest to press it higher. And right now, I think that this chart, this chart is basically telling me, wait a second, just to wait. It's basically in a holding pattern. And if it can't make a new high over the double top, which is the opposite of a double bottom, then it can't, right? And if this next press to the upside can't break through, well, then that is probably likely going to be the sign that you do, in fact, need to come back lower and revisit at least these lows in this general area, which might be a decent pickup spot. But in reality, if I zoom out here, again, if that happens, the better pickup spot is in this general area where the last group of buyers was. But we're very far away from any of this. So it's too early to say. This still has to play out. And the only way that this really happens is if this is the box that NVIDIA is trending in. Two scenarios here. One, this only gets to 187 and then it starts to reject, and then you have this kind of trajectory, and it's literally this. So like I said, there's a lot of work to be done before this is really like not happening, like not going up anymore. There's like 1, 2, 3, 4, 5. This is multi-weeks. This is really like a couple weeks of price action. And then, okay, fine. Then we're probably looking at this kind of general 150s area. But until then, we probably have some upside to go to. And then at that point, we'll get a chance to say, okay, well, can it actually get over this 200 level? And we'll at least get a chance to test that general, it's 195, sorry, 195 up to 200 level. But we got to get through this top box first.
So
what we lost today.
Like a flat reaction is enough to be a win for NVIDIA.
In the moment, yeah, for sure. Right now, NVIDIA is not going up and it's not going down. It is definitively going sideways. And it's not in a tradable zone from a trade perspective. So again, trading version of the show, not investing version of the show. It's more of a wait for a setup. Trading needs a setup, and there's no setup here, not yet.
Okay. Let's do hoodie. By the way, guys, EOSC Energy, I know this is a popular stock. They diluted after hours. That's why they're down 9%. I don't know the full amount of the dilution. Oh, 500 million. Okay, so convertible note due 2031, 500 million. Again, some of these smaller stocks, they're going to have to raise money through diluting, and that's why that stock is down.
So hoodie, man. So this is where I was on my hoodie, looking for some kind of consolidation. And the last time we're here, like my logic on hoodie was that we would have this kind of consolidation and eventually break up and get into here. Well, somebody rained on my parade and it broke that consolidation level and it actually started to break down. Everything I said about hoodie, I love hoodie, right? But I do have to like juggle with the idea that, not the idea, what's true is that this level didn't hold, and therefore I'm not actually in that consolidation. So this whole logic has to come off the table at the moment. So right now that's not happening. because trading is very much if this, then that. And if this scenario, well, it's not happening. So then that is not happening at the moment. Right now, we've broken that potential consolidation. We've lost this 20 and 50 day. And if this does, it's not right now. It's sitting like on the edge. And I bought more hoodie, by the way. So I'm sitting here thinking, what am I going to do? I've bought hoodie in the 120s, 125s, in all of this area. So I'm kind of thinking, well, these recent buys, I have a potential situation on my hand where maybe I can harvest some losses on those buys. But I haven't decided really what I'm going to do yet. I have some time to decide if I want to do that. But quite frankly, it's like this guy, if it does fall, it's like, and if I sell those, the thing gets bought up so freaking fast. It's crazy. So I don't even know that I don't think I'm going to be able to buy fast enough. And everything will probably bottom at the same time anyways. And I won't be able to buy everything I want all at once either. So what I'll say is that 100 was, when I posted this, 100 was my level. And that actually comes from this general, what we call like high volume node, or like on the right hand side of my screen. We've talked about this. We trade typically peak to peak. So if this was a little mountain range of volume, here's the mountain peaks, right? Like down here. This is where I see confirmation of where the large buyers stepped in the past. So this is where everybody's cost basis of recent is. And then we had a big move right over here, and we have a low volume pocket that sits right around 101.34. We call this a fair value gap in trading. Some people call this a fair value gap. I call it a little low volume pocket, but right here, 101.34 is the next, what I'll call like a price of interest. And I can draw this straight across, and it actually sits right at the bottom of this general areas, which is just around $100. And that's a nice little round number. Is that going to stop this? Again, just like BMNR, when it gets here, you have to see. I think it's a decent DCA spot, but at that point, let me take this off. Let's go ahead and pull from this 200-day simple moving average low to the high. What's also true is that if I were to take from the $30 lows, I do have a 50% retracement that gets me into this area, which is the absolute like bare bottom low. So I mean, literally,
which is also, I mean, if S&P is anywhere near 620, 630, it's not crazy to think hoodie.
I don't know, right? But what I do remember, and what I always remember, is that fintech bottoms first, and fintech bottoms quickly, right? And SOFI and Robinhood do it fast, right? And if we remember the hoodie over here, I mean, okay, so this moment in time, this right here, by the way, it's very similar, right? So this here, so I'm running out of time, but hoodie, epic earnings, this right here is a 51-day snapshot in time and a 56% drawdown. 51 days, 56% drawdown in time. I mean, did you snipe these $28.50 lows? Probably not, right? No. So like to the investors out there, I'm not selling the damn things. I'm sorry. I'm not selling anything because I'm not going to be able to catch that absolute snipe of a low. Are you? And I do this for a living, man. Like, I'm sorry. And they're all going to bottom at the same time. There's no way, right? And then followed up by a 50-day, 130% rally. So it might look bad for a minute, but like if you panic, like immediately, boom. And this is what I'm talking about, right? So yeah, it might look bad for a minute. Something like hood is going to whoosh, like right out from under you. So like from an investor perspective and a trading perspective, two completely different things. And this is why it's very important not to mix these two things. I hope that makes sense. And I don't want to scare any investors because trading and investing, this is why right here, this is a perfect reason why they're not really that compatible. Rephrase me. emit if I didn't say something right here.
That's very fair. And you're basically saying, given how the technicals are lining up, if we were to get a drawdown, yes, 85.90 is possible, but also these are the quickest stocks to bottom. And if you panic at 85.90 with a cost basis of 40, it might run right against you to 110, right?
Yeah. It's a great company. This is like, I mean, the best company, the best company. But this is number one on my shopping list.
They had one of the best earnings in the whole quarter, and then they got hit 10% the day after. You know, so it's not really them; it's the market not willing to cooperate with a lot of stocks.
Yeah, and you know, fintech tends to bottom first, and they tend to have the most violent pullbacks. I still hope that like the event contracts and stuff hold them or stop them from doing that. But there's a lot of crypto association here, so you never know. It's always fair. I'm way over time. This is my favorite stock in the market. I don't trade it a whole lot because I don't want to get caught up selling the lows, right? Like you sell the lows, and then here's what's happened. You sell the lows on something like a hoodie, and then you FOMO back in, only to have this, I'm not joking, right? You sell the lows, you FOMO back in because you think it looks good. Then you sell the lows again at another loss. And then you FOMO back in because you think it looks fine again. And then you sell the lows yet again at a massive loss. And then you FOMO back in. Let's say you don't like buy the top, but you FOMO back in. You think it looks good. And then you have this massive day. You sell for a small profit. And then you think you add back, and then you sell the lows yet again. I mean, that's what's gonna. Sorry,
we've all been through something like that.
Yeah, I'm not just so trading and investing. Let's not mix them.
Okay, Meta.
Great strategy. I mean, that takes skill, by the way. So it's like you can like virtually raise your hand if you've done that, but like we've all been there.
It does take skill to do that. It is quite hilarious when that happens. I've done that more times than I can count, and it's annoying. But you learn from it, right? I did that a lot in 22 and 21, and just realized like it's better to just hold it.
Buy the highs and sell the lows.
Yeah.
I mean, dude, talent, man. Oh, look, we got some hands right. Look at. Oh, yeah. But that's why patience, dude. Time heals so much. Time heals so much. So here we are on Meta. This is my box, and I think it's really important to know that. Look, we've hit my box.
By the way, guys, I sent Steve, the NYU professor by Apple. He said he's so fucking stupid. NYU should fire him. I disagree. He's not stupid, but Steve hates Apple now, so it's kind of funny to his reaction. Okay, go ahead.
Yeah, Apple, I think we can look at Apple. I'm actually I'm not so sure about Apple right now. But so we're right here, right dead center of the broadening range. Meta, it's the nibble spot. It is literally right in that golden pocket, not the golden zone. It's literally here. So what I need to see now is I need to see that structure show up. And I'm still watching. Like, I mean, I don't think this could have tagged my actual spot any more perfectly than it did today. And I mean today. When we talked last Tuesday, it was very much, hey, look, we lose this 633. We are going to go very likely to 585. And that's, quite frankly, exactly what happened. This was a statistical edge in terms of trading. That's how that stuff works. If we can get over, like if we see structure like this build, you're very likely going to see that 633. But that's all that's going to tell you. And it's very likely that we actually get this for a while. So the structure that I need to see actually should show up within this entire range. And it's still unfortunately not going to be until I'm up and over 630, like 635, that this is really out of the weeds, because of all the charts and what I said, what could actually be, what would actually be bearish is if SPY was below all significant simple moving averages. In fact, Meta actually is below all significant moving averages. One thing I'll say, I saw a lot of stuff about this Bitcoin death cross yesterday, which always makes me laugh. Let's take a look at this Meta setup right now. A death cross, if you don't know, is when the 50-day cross is below the 200-day simple moving average. First of all, when Meta's death cross appears, it's going to be like freaking 2 years late on this. It's very likely going to be the low. So when you see the headlines about Meta's death cross happening, that's probably when the buy is about to happen. Just so you know, death crosses have called more bottoms than I can count. If we want to look at Apple, I'd love to look at Apple next, and I will show you exactly what I'm talking about. But this is why this is such a lagging setup. It may be closer to 550 is the next level, somewhere in here. And if all hell breaks loose, it's down here. But right now, we are at the level where I need to be patient and see structure show up, meaning I need to see a little bit of sideways chop. Remember, I'm looking for something like this to show up in this area. And still, I have nothing but lower highs and lower lows, which is true on a daily perspective. So what I need to see is a higher high and a higher low from a daily chart perspective. And I just don't see that on Meta yet.
Do you think 550, which is a target I keep hearing, is possible there, or?
Oh, it's definitively possible. And I'll tell you when it's like, when you have a day open and close below 584, that's when you know it's not just possible, it's pretty much going to happen. Yeah. Like it's not at this point. So it's if this, then that in trading, right? If this holds, then that's not happening. If this breaks, it is happening. And here's your session gap. It's not just that, right? There's another one, right? 506 and there's another one, 413. So it's one level to the next, right? So we lost this level, we go to the next. If we lose this level, we go to the next, just like this, right? And the big ones are down here. But at the same time, if you reclaim a level, you go to the next, just like this. And this is trading, and just how it works, right? And so these are what we call pathing. So if this comes back and holds, cool. And it's not going to be until you get back over here, right? So if any of these happen, your pathing becomes boom, 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 right? But until we get that break of structure, meaning like until I have the pathing start to go boom, boom, it can go this, right? Pathing. I can't say that the trend has turned around. And so my job as a trader is to wait for the trend to start to show signs of life of reversing. Otherwise, my job as a trader is to stick with the trend. And currently the trend is slowing, but it's not reversing, right? And so it's to stay short, if you will, in this one, but cover any shorts in this instance and wait for a reversal setup to show up.
Okay. Nebius.
Oh wait, I wanted to show you the Apple.
I think we should do some others before Apple, because honestly, no one cares about Apple.
Oh, I was just going to be so fast.
Okay, you can do it.
All right, I was just going to show you the stupid bear cross or death cross. It's hilarious to me, but it's literally, I'll just quick and done. But the Apple, when Meta gives you a bear cross, all I was going to say, death cross, bear cross. This right here, that's the death cross of Apple. Like recent, April 2012, when Meta gives the death cross, look at how like that. I mean, that basically called the low on Apple, and Meta is going to lag this much. And so I think when the bears really come out, like Meta's death cross is happening, it's probably going to look a little something like this, and I'll probably really step in. So anyways.
That's fair. And if that does happen, I think you have a lot more people get excited to step in.
Yeah. All right. So Nebius, that's all I wanted to say. But we can look at it later if the guys want to look at it. Nebius. So 87 was one of the levels that I was supposed to text you on, and I texted. I did text you today.
You did indeed.
And
I did 3 as well yesterday.
Yeah. So 87 comes from. It's a small level. It comes from here. It's like the bottom of this earnings gap up here. So, and this is a little bit better structure. Today's price action, which means candlesticks, is this is an important day for Nebius. And this 1 day's candle is this is a tell. If candlesticks were a story of if the chart was the story of price action, candlesticks are like the day-to-day drama within the story, right? And the words or sentences within, like, this is the alphabet, right? And so what this is telling you is that there was a singular battle within the day of Nebius. I mean, sorry, this to be really dramatic, right? But the battle ensued, and really the bears were in charge today at the beginning of the day, because we started this little bottom wick means that we started red, probably deep red, and we started to go down. That's what that means. That's what this is depicting, because this little bottom wick, that's what it is. We were down. We actually were down so much that we were making really new lows. And at some point in the middle of the day, there was a pushback. There was the defenses held literally at $82. The defenses held right here. And there was it wasn't just a defense, it was a counterattack. Like, there was a counterattack that was launched, and it actually was launched so strong that it not only broke back up to the lows of the prior day, but it actually pushed all the way up to the highs, to the midpoint of the prior day, and up and over that breach point. And actually, they won the battle on the day itself. So this counterattack that was launched by the bulls on Nebius for today is a pivotal point in the story of this stock's price action today. It doesn't mean that the whole momentum of this war has shifted. It means that a very strong counterattack has been launched. Now they're still under attack. That's true. So it can come back down, but you do want to know that this level right here, this is the stronghold, right? And there is a very strong defensive structure here where counterattacks are being launched, and so strong, in fact, to the point where, look, it's not only a defensive structure, it is a straight up counterattack to the bears. And that's what you need to know from the story of price action in this instance. When you see something like this that opens deep red and actually closes bright green, that is a pivotal narration of price action that you're actually seeing. And this is what we would call a bullish engulfing or a reversal candle. Usually what this means is that there will be a pushback by the bears, but as long as it holds this 87 level moving forward, this can be the beginnings of a reversal. You will know that the momentum has indeed shifted by today's high. It's as simple as that. Today's high, 93.69, means that from this point forward, all right, that counterattack that was launched today, the momentum did indeed shift the story here. And the bears will be, or the bulls will be, the bears will be on retreat. And
okay,
the
so
bulls
up or down?
Up, as long as it holds over 93.67, up. 93.67, this is going back up.
Okay.
In between, you can see some chop, but that's today's high. Lock it in, draw the line straight across your charts. That's the level.
Okay, Rocket Lab.
I mean, Rocket Lab looks like it's gearing up to be something similar. This is a defensive stronghold, but not a counterattack. So maybe you get a counterattack tomorrow, but you're
loving this analogy, dude. I love it.
Do you? I mean,
I like
I worked
it.
on this for a while, but it is a very strong defensive hold, but not seeing the counterattack. I actually like the spot. I like this spot a lot, but this looks like it could be just holding a bit more. So I think that tomorrow is a good day to watch a stock like Rocket Lab. I actually think tomorrow is a very important day to watch Rocket Lab. So if it's below 41, I mean, clearly we have some more work to do. The last time there was a big move that, well, let's call it, if you like the analogy, the last time there was a big battle, it was at 38.25. So that's where the attacks will be launched, is 38.25. But this is more of a defensive hold.
Do you? I mean, the lows were 15 in April. You're thinking 38 is when bulls should start really defending it. No,
they're defending now, right? Okay. But it's like how well do they defend? Like there's a difference between like, oh yeah, I'm just gonna put up a shield and stop you from hitting my door down, and there's a difference between actually shooting back. Like, am I actually firing back, or am I just holding strong? Right. And that's the difference between Rocket Lab today and NBIS today. NBIS today fought back, right? Rocket Lab today held strong. There's a little bit of a difference, and that's what that story is.
By the way, you could pause the timer real quick. We got a Trump tweet. Investment in AI is helping to make the U.S. economy the hottest in the world, but over-regulation by the states is threatening to undermine this growth engine. Some states are even trying to embed DEI ideology into AI models, producing woke AI. We must have one federal standard instead of a patchwork of 50 state regulatory regimes. We can do this in a way that protects children and prevents censorship. I think Trump is trying to preview some legislation that would be very bullish for more AI investment, but he's got to be able to justify a federal, I guess, standard to implement that legislation versus going through the states. And he is right that, California has different standards than Texas, but that might be a preview to something else. All right, back to the lab of rockets.
Oh, dude, I think did the chat like the analogy? That's funny.
I think they appreciated it.
Yeah. I mean, hopefully it just makes sense. That's all.
No, it makes sense. You're basically talking about bulls and bears in a battle to defend the price, right?
But that's I'm just trying to get people to understand how to read the charts like a book.
Yes.
Like a storybook. So anyways, yeah, this is interesting. It's a good spot, but is it like the ultimate spot? It's a decent spot. It's not the ultimate spot.
Okay. Palantir.
Yeah. Palantir looks like our hoodie, man. It's like, things can change in an instant. And dude, if there's two stocks that I just don't understand how people short, because could you imagine being short some of these stocks sometimes, the way that they get bought up so fast? Like, good God. Do we want to stick with 5 minutes on these?
Yeah, that's fine.
So Palantir's next level, and again, I'll stay with the mountain range, right? It's this. And so it's in the 150s since we have lost that 170s area. I called out 173 last Tuesday, and 173 hit like right in this area. I think it was here, but it did not hold. It defended for like a day maybe, but it was a pretty weak defense. And where we are today is we actually tagged the top of it today. So like if I bring this line up, that's 172.48. that's basically the top that we rejected on Palantir today of my general level. And we closed kind of intermediate lows. So it's not the low. What I could do that I haven't done, and I don't really like trend lines as a general practice. It's not like my favorite thing. Yeah. I mean, that's honestly a stretch. I think if Palantir gets back over 173, cool. It's all good. But this morning's kind of like top tick at that exact level is the one thing we're like, hey, look, any of these people that were buying right here, I just don't want to see that become resistance, because this general area right here was support here, and here, also here. So if this goes lower, what I don't want to see happen moving forward is this general area becomes support. And so tomorrow, not really, it's not about tomorrow. First of all, I didn't say this in the beginning of the show, but I really should have prefaced this with like, this whole week, I think, quite frankly, is going to be a lot of shenanigans with NFP coming, NVIDIA earnings coming. I think this entire week is going to be mostly meaningless from a trend perspective, because it's really going to be about how the market digests next week, quite frankly. And I think that we could see a lot of knee-jerk reactions this week. But this here is what that would look like if these people are weak-handed, new money. And I think we would see this 150s general area. But even then, you still have to kind of see if that shows up as actual buying support. Probably not 150s, probably this low 150s. And you're gonna need to see this cohort of buyers step in. Is it 150s? Yeah, it's a general area. It's very wicky down here. A lot of buyers stepping in the low 150s, as close to 150 as you can.
142 was the low of August.
Yeah, I mean, I have 144, and the real, because things can get weird. And again, are you going to snipe these exact lows? So it's probably better for me to say below 150, as close to 140 as you can, because sometimes these things happen after market, or they're only there for a couple seconds before these things get bought up, especially on something like a Palantir or Robinhood. I mean, how fast is Robinhood going to see 100 if it sees it, or 90s or 80s? Like it's probably going to be milliseconds, man. It's probably going to be as long as Ethereum sees 2,700 if it sees it, right? Like very quickly.
I think we underestimate how many people missed out on some of these names and would be dying to get the exposure if they had an opportunity.
Yeah, so I would not trade down towards these levels. Rather, I would actually set limit buy orders if you really want them, so that they're working good to cancel, extended hours on, probably something like that.
Yep. Okay, Tesla, which by the way, after hours officially got approved to get a permit to operate as a transportation network in Arizona. So that is the news after hours for Tesla.
So Tessie hit my level. I texted him, he didn't buy, which is probably good that he didn't. It was a good trading entry, I think, but I would preface this. It definitely hit my level, 380, something like that. It got a really big bounce, but Tessie is definitely not out of the weeds here. 415 has been what I've been talking about as like that pivotal range. When you get a big breakdown, and this is the same thing that we've been talking about for a while, is that this prior support, well, we know is going to hit its head, and it's going to probably the first time act as resistance, which is exactly what we're seeing. So to see this pullback here and now, to me, not surprising whatsoever. And if you didn't realize that this is what's happening, well, you really should realize that this now is acting as resistance. just as an aside. This 415, if you're new to the show, comes from over here, comes from way over here, circa November 2021, all-time highs. That level still absolutely is in play from 2024 breakdown, 2023 or 2025 support, now potentially 2025 resistance. So for now, until Tesla is back over 415 in strength, it's not back in its uptrend. and the dip buy, but the broader up, not in its active move. It's potentially in the consolidation. The broad uptrend here, this is still intact. So this is good. That tagged, I think it's fine. But what we have to see from here is more consolidation. What I don't want to see is this happen, this little blip and a breakdown below. And so where that leaves me is 387. So below 387, no matter how I slice this, however this chart ends up working, below 387 or essentially that the other day's low, if that gets lost, then in fact we're talking about pulling the whole thing back to the 350s and really retesting these 360 type areas. So that's what that's going to be. Is it a big thing? From an investing point perspective, it should not be a big thing to you. From a trading perspective, that's a tradable range. But again, it should be pretty quickly that happens. And again, if you're into investing, this is a buy to me. And that even then, it would probably still take some time. It won't be, if that happens, you'll see the distance between the 20 and 50 day actually start to expand, and eventually the price will get back over the 20-day. And if you're okay with this, since I have two times or 2 minutes, 2.5 minutes left over, it would probably look a little something like, where did this go? Here. So here's what an actual bearish breakdown looks like. SMA is super tight. That's as tight as tight could be. They're probably all on top of each other. Full-blown breakdown. Range expands below. This is like a 70% drawdown on Tesla.
That's 2022, right?
2022, yeah, from $300 all the way down to $100. Massive dumper, right? Like all hell breaks loose. You have time though, right? All hell breaks loose from here, right? And this is the price action I'm talking about. There's a little blip, comes back up, but this day here, actually 275, you know that mayhem is about to ensue when you don't get back over 275, and a 100-day, 63%, $180 drop ensues. But time heals a lot, right? And it always starts with the 20-day simple moving average, right? And that's how it starts on the downside. That's how it will start on the upside as well. And this is what that bearish to bullish reversal looks like. It will begin to break back over the 20-day simple moving average. That first move is going to be big, right? But it's not going to be the move. It's going to hit its head probably on the 200-day, and then it's going to go sideways for a while. This is a long while. And eventually the distance between the 20 and 50-day simple moving average are going to expand again, right? And you're going to know probably somewhere right around here when they're really tight one more time that things are actually going to be on the up and up. But you got to go, stocks go up and then they go sideways. This is sideways. It's slow, grindy, but sideways. And when the distance between these start to go again, boom, you're back in the game. And by the way, you're all the way back to where you started. And time heals a lot. And that's what that looks like. So it can be bearish for a bit, but to say like the highs are in, no, the highs are never in, right? Like
I think that's a trend of what you've been saying on a lot of tickers. Like it could look bearish in the short term, but it's not the type of engulfing bear trend that you saw in 2022.
Yeah, no, it's not. That's not that. Look at this. This is not that, right? And I'll go back to, Google. It was similar, right? Google 2022 is very similar. This is 2023. They all looked like this, right?
All under the moving averages.
All under all of them, right? And you have a big drop. We're not talking about this. We're just not, right? we're talking about this basic stuff, right? We're
Yeah.
not even close, my guys. Like, we're not even like, what are we talking about right now? Like, we're so far away from something like that. Are we steep and uncorrected? Absolutely, yes. But even something like Google, look, let's be real, right? Google, by the way, has not even lost its 20-day simple moving average.
Yeah.
Can it lose its 20-day simple? Yeah, absolutely, right? Is it steep and uncorrected? Yeah, it is. But is the structure fully, completely intact somehow, some way? Absolutely, it actually is. How? I couldn't tell you, man. But it is, and there's no way that you could deny that it's not, quite frankly. So there you have it. So some things good, some things not so good. That's what's true.
SOFI.
SOFI. All right. All right. So SOFI. SOFI yesterday also had the first day under its 50-day simple moving average yesterday, which that was yesterday. Here's today. You get a little extension. You hit a bit of support here, but it's kind of a weaker close. You get a bit of a. Is this a thing like your double bottom? I didn't know that was like a thing for you.
For some reason, you find all these double bottoms.
Well,
I don't know how. But.
I mean, you always put me on the bottom. I thought you were a top. Clearly, you're a top. Right? What are you laughing about?
Oh my gosh. No, nothing. Continue. You're such incredible analysis around technicals.
Yeah.
It's funny because you're right. You literally are on the bottom of the screen. Which
you always put me on the bottom. you just grab. You're on the bottom. I'm a top. All right, fine. but anyways, here we are. So you found the.
You're not helping me beat the allegations, bro. You're not helping.
Bro, I'm just saying what's true. Anyways, another defensive hold, but not like dude, the Nebius chart was something else. I gotta say, the Nebius chart was something else. I mean, that's an important type of setup to see. It doesn't mean it's over, but it is an important moment in charting to see that kind of a pushback, right? When you see those things, those are real storytellers. So yeah, we're holding support, but we want to see that kind of violent pushback. And tomorrow's a new day. I think this market is on hold for not just NVIDIA, but broadly speaking, NFP. And this is another, some things like SOFI are highly tied to rates and things like that. And this is not going to necessarily be tied to NVIDIA, but very much to this data that's going to come pouring out that the market is more or less on edge for, right? I think the sentiment right now is that this data coming on Thursday, not Friday, will be largely bearish or hawkish, if you will. Not hawkish as in terms of like, well, let's say bearish. And the market doesn't really know. And the market hates uncertainty. This is what we do know. And without clarity, we just see the market on edge. And that right there, I think, is what we're really seeing in the charts is just that level of uncertainty. And we've been so certain for so long, and we're on the cusp of getting this look of historical data that's probably just going to be old and stale anyways. And by the time it actually comes out, everybody's going to be like, oh, dude, it's old. Nobody cares. Who knows? Whatever. And things will eventually start to change later. But when it comes out, it's going to be the first time we're going to see a lot of this stuff in a while. And so those are the things that I think have a stock like SOFI a bit on edge. And, if SOFI loses this, the 24 area is absolutely on deck, at least for where we know SOFI has their real stand. 24 and change. Does that hold? TBD. But I think that's where you see the stand actually happened in that low 24 area, not here.
Okay, that's fair. AMD, what are we thinking about this one?
So that prior all-time high 227 got tested again today. The close was actually pretty weak. I think with NVIDIA earnings tomorrow after the close. So again, either this 227 ends up being support or it ends up being resistance post NVIDIA earnings. I think something like this, you just wait to see how the cards pan out. This one is well over its 50-day simple moving average, but it, like I said before, it always starts with the 20-day simple. So from a trading perspective, the options market was going out for blood, but when you lose the 20, it is usually a pretty easy move to go in strength to the 50, which is about 210. So, and also 210 on this here. If I take this area, two things on AMD. One, here's that power earnings gap. I believe this is earnings. It's got to be. If I lose this 227 in strength, for sure, I have to assume that I go to when I have all of these things. What's going on here? Let's pull this back down to here. If I lose this 227, I should probably see two 10s for the 50-day. If I lose the 50-day, I should probably see that 187. And I think this 187 area, which is that 50% pullback of here, it would be this trajectory and then this trajectory if that cannot hold. And I think that 187 is actually where I said way back when, where I would actually think a solid pullback would lie when we first talked about AMD from this big move. Correct me. I'm pretty sure I did.
You're right.
But otherwise, if that doesn't happen and 227 does hold, this is what the AMD bulls would actually be looking for, to see this area actually form some kind of support based on that prior all-time high here. So that's where AMD's at. This is at a pivotal spot on the chart. A breakdown, or just not even, this is not a breakdown. This is a blip on the radar is what it is. To 210, that doesn't even justify a break. It's just it's a wick. It's like a wick down from an investor perspective. That could just be like a blip. And then it could instantly get bought right back up and then right back over, and then potentially have something like this. This, by the way, is what structure looks like. And then you would want to see something like that. So this drop, if you saw structure show up, structure actually looks like this. So it could be a liquidity grab down there, but you want to see this kind of structure play out. I think it's a little early, so time will tell on this one.
Yeah, I agree. I also think AMD has done a relatively strong job holding the line from the OpenAI announcement. I mean, AMD was 150 for almost 3 months, bounced up to 205, then 210, then 220. Now recently been holding 230, 240. And what's the biggest fundamental concern that's been happening over the past couple of weeks? AI bubble. Who's the biggest culprit in this AI bubble as per the market? OpenAI. The reason AMD pumped 100 billion in market cap was because OpenAI said we'll give you 100 billion in revenue. And so the fact that the market isn't taking away AMD's premium, I don't know. I kind of feel like that's good for the bulls that they've been holding on.
Yeah, it's just it's this 227 area. The 20-day is the first kind of canary. That, well, not canary. It's like that's when you know, hey, look, we're gonna at least go into consolidation. So know that that's where AMD is. It's in consolidation. So you're gonna be you're on the hunt for the next level support right now. And until that's defined, that's what the stock is going to be looking for.
Amazon.
So I did buy this one. I mean, it's a tiny nibble. The reason I did is because of the setup, like longer term. So I still like Amazon's setup longer term. And it's back to that SMA, right? Like, even though like it's more stretched, it's closer in terms of Amazon consolidating. If Amazon consolidates, even if I get a little bit more of a dip, I still like the idea of a Ripsky like that into the foreseeable future. And so because I'm closest to the 200 on Amazon, and I don't know if you heard, like, I heard the argument on Apple. I don't. So
Aswath would hate Amazon for their capital. I mean, I don't think you'd be a fan of them.
Cook is leaving Apple.
Correct. Yeah.
And that's why I would have more concerns about Apple. Period. End of story. Because I mean, you do invest in leadership, and that's funky. So it's possible that we get same kind of exercise that we always do. Oops, sorry. Is this 215 area gets retested one more time. So if I'm looking at this last low, and I want to look at the high before the last low, this general area in here would actually be where I'm looking for my niblets, like little droppings of buys. Not a lot, but like just to, what's the word? Accumulate, if you will, slowly as an investor. So today, big red candle. This was very much about that same, like we did this last week with you about, when we have this big major earnings type move and how the setup works. Look, and I actually posted this chart, that move, I think it was last week, when Amazon lost, I wanted to see this 235 hold. And when Amazon lost this 235, I think it was like yesterday, it was pretty much in the cards that we were going to fill that entire earnings move, which is exactly what we did. So it was just a nibble today. I'm well aware that we can see 215 and possibly even breach down here. But the deeper this goes, the more of a buy this becomes to me from a long-term perspective, because this momentum, while it is steep, it's going to be steep and uncorrected to the downside because of how fast this is going. And I think this is going to get actually a bit overdone. And I'm, as an investor in Amazon, kind of excited to this, because the steeper this gets, the more ridiculous this will get over time. And the more of a slingshot recovery I'll actually have later on.
That's why I bought today as well. I mean, it just completely erased the earnings move and then some. And I'm kind of just like, okay, I get that the market's upset, but
yeah,
does that deserve?
Yeah, I'm well aware that this could go a little bit lower, or even I think you are too. Like, I'm aware that this could go lower still.
But as you said, you got to take a nibble somewhere, right?
Yeah,
that's fair.
And plus, Black Friday's coming and Christmas and all that stuff. I mean, okay.
Dude, if the Black Friday holiday numbers aren't good, that's how the Fed knows it is time to cut these rates, dude. People don't buy on Black Friday and Christmas.
Yeah.
That's not the best.
We'll see. This is a stock I don't actually, at this point, look, it's been sideways for a while. This has always been one where, like, look, we have this, having this, and having another one with your whatever that is. I can see all of that happening. And my target here, long run target, he's actually still fully intact. So having this, or even like a breach of this, holds that intact. And so if I could get this really close to even 200, dude, okay, first of all, If I can get this, so this is shopping list item. If I can get this close to 200 and have a target of 300, I mean, that's a 50%. Dude, that's a 50% equity.
Yeah, it's a big move.
I mean, I'm good with that.
Agreed. CoreWeave.
This one's got did you read my text about something? So this your thing didn't hold.
What thing?
Your pattern.
The oh, we don't have
So it's not always great.
Oh my gosh. Keep giving you these stocks that are involved. But it's the chat. It's not even me, dude. They want.
Oh, is it the chat?
Yeah, they
Okay.
like they really want CoreWeave.
Okay, so there's something going on with the CoreWeave private credit market.
Yes.
That's saying that there's a debt issue here, right?
They doubled their backlog, 55 billion in revenue, and the street does not care because their debt to equity ratio is over 3x.
Yeah, and so but the interest and stuff on said debt is like it's getting to the point where it's like Carvana back in the day, right? Where it's just basically like the street just doesn't believe that it's going to happen.
Exactly.
Where the bond market doesn't believe that it's going to happen. So it's a bit of a canary in the coal mine, if you will, right now.
Okay, so it's down from 150. Does that qualify as a candidate for bottom fishing or no?
Mm-mm. At $50, you can hate me.
I don't own it. I don't hate you. You got to give us the truth.
They might. Yeah. I mean, you gotta wait for this to drop. So $50 comes from just taking this bounce. If it breaks down, shit, that's 20. Like, no way.
The IPO was 40, right, guys? So, I mean,
the IPO was 40. The IPO high I have here is 65. I have 50 as 50% of this move right here, and a full doubling of that move is right here. Albeit this is pretty wiki. You just have to, we could take this one move at a time. And if I just took this one move at a time, this is still saying like 65s, low 65s.
The thing about this one is if Iran and Nebius hold their weight and CoreWeave dumps, that's how you know the street is giving up on this one and they're preferring the other data. Even though this one has better metrics than those two from a backlog perspective, but they don't have the type of debt profile that CoreWeave has.
It's the debt. It's 100% the debt.
No.
Yeah, I think as close to 60 as you can. And this is a low float still, I believe. There's a bit of I hate to say 50.
It's like Nebius has debt, Iran has debt, but they don't have the type of debt but they also don't have the type of growth technically. But it's almost like it's a catch-22 because the street doesn't like that. It's coming from the debt.
Yeah.
I mean, this is NVIDIA's largest holding. They own $4 billion of this company.
Well, I mean, at what price though, I guess is the thing. And
it's just like the fact that NVIDIA is like trying to backstop them, right? And the street still is like, no, we don't care. It is incredible.
And this is turning out to be like a BMNR also, where it's like, you can think that there's a good price anywhere, but at a certain point, you have to like just chill and let the buyers step in and not worry about getting the lowest price possible, right? Like if I were to start buying CoreWeave, personally, I would be happy buying it higher. I would rather buy it higher than lower and not worry about bottom fishing, because this is mixing trading and investing, because I want to see like a good investor base step in before I try to snipe a low, right? As an investor and a trader, my job in either of these is not to snipe the lows. It's not to get the lowest cost basis possible. That's not my job. In both scenarios, as a trader and an investor, my job is exclusively to extract as much freaking money as humanly possible from the stock market. That's our job in all scenarios. And that can't really be mixed, right? Like that is universally true. And it's not to bottom fish either. So I do have to identify good companies with good growth, with good cash flow, things like that. This may be that from a fundamental perspective, to each your own, I don't know. But that said, I have to make sure I get it I have to try to get this at the right time also. Or, I do it once and I just let it be. And I don't worry about continually DCAing into this, because I make my purchase and then I just wait for the rest of the market to come around to my viewpoint.
Right.
And when they do, then I'll go ahead and buy more.
Ethereum.
Sorry, that's just my 2 cents. You guys don't have to agree with me. It's just like my logic.
Yeah, we could do BMNR after Ethereum. And because Ethereum did have a little bit of reversal, we have one question here of, can you ask Jason how to show us how to spot a reversal? If you think there is any reversal from 29 to 32.
I mean, if you timestamp that Tesla thing I just showed you guys, that's perfect. Like that's why I did that, right? When we go from full bearish to actually finally going, timestamp that Tesla, that's a reversal setup. And I think that's easy for investors to look at. But it always starts with the 20-day simple moving average from a long-term perspective. So what am I doing on Ethereum? Just the status update.
Leading into BMNR, your thoughts on that stuff?
So I said 2800s. I think I'm going to stick with that. Quite frankly, it's potentially lower, but I don't think, like, if you're in something like a Robinhood or something like that, I don't think you're going to get filled lower than that. This is like that meta setup right now where you're at, so this here, what this is from this high, is this low to this high, and it's a 50% retracement, right? Also shoot. I don't know if we can do it later, but
what?
How to spot reversals. I'd have to pull up like training decks and things like that. It's a price action thing. Dude, we're going to release the beginning of school of gains, like the foundational stuff, like pretty soon, I think at the end of the month. So
let me just, this is Jason's links. If you guys want more of Jason's stuff on Twitter, he has a lot more stuff if you want to go deeper with him in terms of TA. So please make sure to click on his links in his Twitter right here.
So right now, from a retracement perspective, we're very much at a meta like spot on Ethereum. So from the extreme low to extreme high, extreme low being 1,200 and change, something like that, and extreme high being nearly 5,000. We're literally at the halfway point. It's an okay spot, but it's not the end all be all. Okay means okay. Okay does not mean good. If we cannot get, and that okay spot, by the way, is $3,166.10, not to be exact or anything. But if we cannot get over that, what is true is that you have an extremely high probability of getting to $2,628.93. Again, not to be exact, over a fairly short period of time. And about 2,800 is what I said last time. This is a statistical probability. If you cannot get back over that 3160, call it 3170 for round numbers, then you will, this is that self-fulfilling fib thing. You will see that 618, which is about 2750. And for me, I'll tell you, you'll probably see 665, right? Which is about 26. And you're going to retest this general area. If you're in a real exchange and you might have like real orders out there, it might be 25. But again, crypto is the epitome of supply and demand. It is supply and demand in its rawest form, and flash crashes are very real. When these things happen, if they happen, I don't know that they're going to happen, but if they do, gas fees are going to be insane. And you may actually have an order that goes through and the gas fee might cost you a full ETH. Who knows, right? Because that also is Ethereum. just as an aside. But that said, I think this is going to be that actual spot that you do want to. This is it, right? And so this. In this general area, my friends, is a legitimate discount. That is a legitimate discount.
This is the first time you said that on ETH so far.
Yeah, that is a legitimate discount. Now, is that a reversal? No, not really. Is it a discount? Yes. What you need to see is from a reversal perspective is if you go back to that Tesla timestamp, your 20-day SMA is going to come down like this. Eventually price is going to come over, and eventually price is going to reclaim that 20-day. Your 50-day is going to be like this. Your 200-day is going to be like that. You're going to get a big old bounce all the way back to whence we came, and it's going to get rejected, and it's going to be a process to come back, and it's going to probably defend that 50-day simple moving average, right? And that 50-day is going to be like this, and that 20-day is going to be curling. And then they're all going to come and they're going to intersect, and your price is going to be like boop and boop. And we're going to be talking about this 36 and change level for a while. And this 36 and change level is going to be the same exact level that I'm going to tell you is going to be the pivot of your big reversal. But here in this area, it will be a discount for sure. Will it be the lows? Very possible. But will it be a full-blown reversal? That's the difference between a full-blown reversal. And if we zoom out and we look at this on a larger, let's call it weekly scale, if that were to happen, right? Here's ETH. Sorry, I'm going over a little bit. When you look at this for just a minute and you think about what this could actually look like, if that were to come down and say a little something like this, and do a little something like this, and then a little something like that. Guys, does that not look a normal chart to you? That looks like a freaking normal chart to me.
A very normal chart.
So, to all that to say what I said. It's just, anyways.
Okay, so then that leads us to BMNR. Are you thinking BMNR is at a reasonable discount at 32 and change?
Probably, but again, I still need to see what I need to see. And that is structure show up. So, you know, the crazy thing here is that it is at my level. It is at my level. But I'm very hesitant to, what the hell? What's happened to my charts? So we got the breakdown, which is quite unfortunate. We're testing these lows. This was my level 33, breached the level, comes back over and sitting on my level. This is the beginnings of what structure could look like. You know, if I look at this objectively, not objectively, but like legitimately, and I say, all right, well, if this can extend, so an extension, $30 was that first extension. I could see 27. I really could. And oddly enough, it actually is exactly that little wick down below. But I mean, the one thing that's kind of funky about BMNR is, like, to be fair, like this chart goes into no man's land after that. So it's like, I really don't know because it is in such no man's land beyond that. And I have to do as if we were doing all-time highs and I just have to use extensions on fibs. I'm just going in the reverse direction, which is what this is. So $30.55 was an extension. If it cannot hold that level, it's $27.71. But again, here now, because this can go kind of wherever it wants to go, I have to like chill. And I have to say, hey, look, if I bought it at $40 and then I bought it at let's say I bought it here and I bought it wherever I bought it, like here, right? I have a cost basis of like 49 some dollars, right? 39 some dollars. I could buy it here, which gives me a cost basis of, I don't know, $35. That's not going to do me any favors if it just continues to go lower, is what I'm looking at. And I don't want to put good money after bad. I'd rather wait for this flush to, if that's going to happen. And then I'd rather wait for structure to show up. And it might be here later, but I want to wait for this to happen. And then I'll buy it if I see something like that. It was a weird pattern. And I know that it's actually starting to come up, because if I buy it here later after this kind of flush has begun, then I know I can add here and it's about to get back to my cost basis, and I'm quickly back in the green, and I'm not really throwing good money after bad in that case. So that's why it's important for me on BMNR to see structure show up, because I don't want to just be throwing, otherwise it could take a really long time. And again, with trading money, I have to consider opportunity cost as well. Investing money, not so much, right? And it's more about allocation percentage from that perspective.
Okay.
But that's where I'm at. It looks okay, but it can be lower.
Can we look at Oracle? I mean, I know there's some fundamental issues here, but is this at all exciting to you at 220 to 215,
No.
220?
Oracle has never been exciting to me, Bella.
Not even after a 35% decline?
I don't like Oracle just in general, but wow, no, this looks dangerous. Are you talking about short or long? Wait a second. What are we talking about? What?
Talking about buying the dip. Would you buy the 350 to 210 dip?
On Oracle?
Yeah.
No, I would think that this is one of those stocks that would be at risk. I would think that this one, along with, first of all, this one's already showing the majority of signs of weakness. It's at the 200. So again, this one has already done what's interesting here is that this has already done what it looks like some charts are like this actually here now, where it's already done the losing of the 20-day. It's already done the losing of the 50-day, right? And it's already made the entire trek down towards the 200-day, which, by the way, this trek is usually pretty quick. And it was pretty quick. This is a typical movement. And usually when this happens, this piece takes a bit of getting its legs underneath itself. And this white line here, remember, that's my 20-day. And it always starts with the 20-day. So this 20-day will catch up to the 200-day. It's what's going to happen. And when this happens, that's when you'll be all right. And by that time, the 50-day will be over here. And this move will take you to the 50-day, which will get rejected. and then your 20-day will be catching up, and then your 200-day will be catching up. And if price continues, then all of these things will be very tight. And then you'll be talking about an actual reversal. But to the person that was asking what a reversal really looks like, that right there is how it actually plays out. It's not usually a V-shaped recovery. I think people get spoiled with a lot of the V-shaped recoveries that we've had recently. That's not typical. What I just kind of drew out randomly is more typical. And it looks a little something like this, just like this.
Okay.
There's one I just saw on AMD. I was looking at. Oh yeah, a little something like this, where you get up, you get hit, it comes back down, chop, 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 but eventually you're back.
Duolingo. Any thoughts on this one?
Well, let's go.
You got people finally thinking this is the bottom, but I don't know.
What did we say?
Did we? I don't know. Did we analyze Duolingo before? We did.
Yeah. We did.
you
Oh
definitely
no,
said
I said 120.
Oh, okay. I don't know. If that's
I'm 120. Because if this, I have 120, honey. I'm sorry. Like, because if this is the thing, then the breakdown, it's like one of those weird patterns where, like, if it actually goes, then the reason why people like this head and shoulders pattern so much is because it has like an 80% probability of hitting its entire target, which in this instance is here is the whole thing. Its entire target is 50% of that, which is about 120. I think is how we have this. This is from here. I mean, if I get you, it's still about 120s. No. No, it's not ready. This next move, no. Why would they? No. No, I can't. No. Because this is, no, dude. Who said that it was, no.
What do you mean? Who? Everyone on Twitter is freaking like Duolingo. This is the bottom. This is the bottom.
There's no part of this chart that looks like it's
down from 570. So I think people just want to believe.
They want to believe.
Done. You know?
Yeah. Well, I mean, they wanted to believe in a lot of things too. I mean, it's slowly I need to see that higher high and higher low, just at least on a daily. I don't even have a higher daily high. I don't even have a higher low. Damn.
Yeah, there's like no one coming in to stay. Like no one gives a
sorry, dude. I will try, but I cannot tell a lie.
Okay, grab.
Grab. Hold it in, actually. Why did my order not get filled? Really?
What price? You did 540?
20.
520? Oh no, we didn't touch 520 today. We got like 528 at the lows.
I have it working good to cancel. Or I mean extended hours too. What is that? 22? Oh my god. Every time. Are you joking right now?
That's hilarious.
It's not, actually.
Why are you being so nitpicky about 5 cents, dude? Like,
this is what I do.
They're talking about me in the bottom.
Right? What an idiot. Oh, wow. What a loser, dude.
All right, we going up or we going down? What's happening?
I've said 520 multiple times on the show as like, this is the area. This is the general area. Again, we still honestly want to see structure show up, but this is the price of interest. So this big white line I just threw straight across, it's an important area. So this was resistance. This is constructive. So resistance here, support here, resistance here. This is the point where it actually broke out right here. Why it was 520. What a loser.
Yeah. Oh, you're right.
I can't believe it. I mean, this was a very strategic price order that I put in, dude. I wasn't messing around. Like, what the wow. Like all the way back to, wow, I can't believe it.
I mean, it might get back, dude. We get another 1% down in the S&P. It'll happen.
It might get back down. I'm just going to have to chase it, dude. I do this to myself all the time. I'm just over precision is such a killer, man. Like, because I'm like,
the dopamine you must get from being precise on certain entries must be amazing as a technician.
It sometimes it's this. It's like
I've done a couple of day trades, nothing like you. And like when you time it right and you make a profit, you feel like you're on top of the world. Because people spend time in their day working and you just press a couple buttons and you go in and you go out and then boom, you made profit. Like that's not easy to do. I have a lot of respect.
Wait, calling a bottom is one thing. Calling a top is another thing. Calling an entire bottom to top, like pinpoint to pinpoint, is
That's not easy.
Yeah. That whole thing is like whoo, because then you're actually dealing with emotions too. Because like human beings are greedy bastards, dude. I'll tell you what. And you just want to stay longer, and you overstay your welcome. That's the hardest part right there.
That's also why a lot of people suck at trading, because like, it really is hard consistently to make profits.
Yeah.
Even on a weekly or monthly basis, you know?
Yeah. I'm excited for this School of Gains to drop. Actually, I've seen some of the edits so far. They look pretty good. Like, I think it's going to help a lot of people.
You're using the new studio, right? Too?
No, actually, we're using this for the most part. That's why I'm wearing the same thing like every day, because my partner's like, dude, you gotta keep it consistent. And I'm like, wear the same clothes every day right now. I'm like, really? All right.
So 520, that's your level on this one.
Apparently it's 522. I mean, just this general area. Can it go lower? For sure. But right around here, the accumulation time, as close to 5 as you can, but obviously over precision is a killer also. You like the stock, this is where you start nibbling. End of story.
Okay, Google, you touched on it for a little, but any thoughts on the breakdown?
I mean, oddly, okay, so Google, it's overextended, but there is zero structure broken here. What I will say is that, so here's earnings right here. The way that I have a system of like, okay, not a system, but like there's a setup that we know is true, is that you usually get one shot to break the highs of a power earnings kind of move. So if this was the big earnings move right here, you usually get one shot to actually make new highs. And Google has had it shot
like 3 or 4 times, right?
Mm-hmm. And it's failed to make new highs.
Literally over the weekend with the Berkshire news, it had another shot.
And so what that means is it doesn't mean anything really bad, but it means it's not going higher. And it does mean that you are at least minimum going into a 45-day hold, right? Literally. And so we are currently in about halfway through. 45-day sideways price action. So Google currently is in a perfect spot to start harvesting premium, meaning selling calls and probably puts, but likely just selling calls right now. What I do have, and I would say, what calls is more along the lines of like 200 plus, or sorry, not 200, 300 plus, like 310s for like 45 days out, 300s, the 310s for like 45 plus days out. If you, in this instance, if you lose, it's 280, then in fact, Google's going to pull the full gamut back. But that actually already happened to Google. And that happened right here. So, and it did actually pull the whole thing back, which is, the whole thing is right there. And it pulled the whole thing back and it just took another shot. So this to me, the pullback has happened. It's actually already held the whole thing and it just took another shot. But this third shot, this was a lower high. This was another lower high. And so I think this still chops sideways. Just know that this is very likely, at least a holding pattern, and you're still, frankly, at risk of going with the rest of the market. But it's all going to start with that 20-day simple moving average. So when if it does lose, it's relatively strong now. It doesn't mean it's invulnerable. But if it does lose the 20-day simple, then statistics say it's probably going to go to the 50-day simple, which currently is sitting around 255. That's all that means is a standard pullback, and probably test this general area. But as long as that's staying over the 20-day simple, which is right about 275, this full trend is like absolutely intact. It's just currently not going higher, which right now this is definitively in a holding pattern. At the highs, structure fully intact, like fully intact. So this one is bucking the trend definitively.
If you would buy Amazon over Google just because Google's at all-time highs?
No. That's like asking me, you know, Apple is historically like the one that bucks the trend first. But as a trader, I also know Apple is historically the last, Apple is historically just the last general to fall.
Yeah.
It may have changed. I'm not saying that necessarily. We don't know. It's got the best fundamentals on Google right now. I think so. But if it continues to have the best fundamentals, that's fine. The market will do what the market does. This still looks good. A lot of these stocks have good fundamentals. The technicals are just okay here. They're a bit stretched, but it's not. It's holding its own. It doesn't mean there are. The thing is that there are a lot better charts in the market than Google right now.
Yes. Yeah.
There are just a lot better charts. So if I look across the market, would I rather put net new money in Google, or would I rather put net new money somewhere else? There are a lot of other places that I think that are better to hide out in if you were to, like, say, you know, for lack of a better term, in the market right now.
Yeah.
I mean, even what was it? I saw like Warner Brothers. This is a good stock today. It's not even biotech. Like, that's a big old stake today. I mean, that's good.
It looks like Fairmont wants to give them $70 billion.
Yeah, was that the news on them? But yeah, I mean, there are a lot of good looking stocks out there. Lily, I think you mentioned like the biotech stuff is still happening. I saw my Merck had like a 5% something move right now. I mean, we talked about this last week. This stuff still looks really good. All this said, though, I will caveat this with, you know, every year this happens and value looks really good. And I told my group this, you know, every year we come to this, I really want to root for like my Pfizer's, my, you know, your J&J, which I mean, you don't have to root for J&J. This thing is freaking all-time highs. But
Horizons, you know.
Yeah, your value, your deep value. And what ends up happening is that these will do good for a while. They really will. And then at a certain point, growth, big tech and the like end up catching a bid one more time, right?
Because people want growth at the end of the day.
Because people are greedy and they want the returns of growth. And the returns of growth, the truth is, are just much better, right? They really are. And they end up selling their value for growth. And so these do good for a time. And I love this Merck chart.
By the way, in 22, Verizon went from 54 to 38. So
dude,
you got to be in the right
reversal.
value names in a bear market too.
Look at this reversal, dude. You don't know this chart. Probably not. This is Regeneron. I sent this in our server. Like, Regeneron, my God. If this chart, crack, turns around, this is something else. First of all, this is the setup that we're looking for. Super tight SMAs, like broadening distance between them. There are very good chart setups in the market today that we're always looking for. They're just not in the same space that you're used to. I'm going to do a time check. You got 30 minutes right now.
Dude, I got a dip. I actually got a dip.
I got a dippy dip.
I'm just thinking the traffic that's going to be there. So if you want to stay on for like,
no, I want to get this. I want to get this stuff out, right? This school again stuff. So I got a lot of recording, but Lily, we covered. I think it's good. I think, you know, these are kind of the things. It's Pfizer. I said it's interesting. It's got to get over 26, right? If it can hold over 26, look, this Pfizer chart. This is teeing up very tight SMAs. It's worth a watch. The narrative may have changed, but it has to get over 26 and trend. Then that can be a very, very massive reversal. I mean, like generational reversal. And that's one where this is actually a very interesting setup, but again, maybe a little ways away from actually happening, but imagine. And there are a handful like that. Sometimes near term, look, I don't think you sell anything, but do you hedge near dated? Sure. This week by itself as a standalone week, I think is going to be very noisy, like extremely noisy. I posted something. I don't know if you can pin it. Just now on my X that I think is like pretty. This is my thoughts, honestly, on the market is that like it's going to be really noisy with all the stuff that's happening right now, and you could get faked out in either way, right? With early price action throughout the day. I actually expect bumpy bipolar fever dream, like manic whipsaws, and maybe some things end in a gut-wrenching despair, right? But fear, greed.
What prompt did you put into ChatGPT to get that paragraph?
I actually just said, hey, my friend Amit is always yelling, it's ripping or we're dumping with every tick. Can you tell me what he will say? But just ignore the noise, dude. Ignore it, really, right? Because at the end of the day, you know, things like this 50-day simple moving average, what I posted earlier was that, you know, they act like magnets, and I posted something much earlier here. And people may have not noticed this, but when I said act like magnets, I don't mean they act like support and resistance. I mean that they act like magnets. This is meta, right? And so there's going to be time to react. This is magnets. They're not support and resistance. They get sucked and drawn into it, right? And so what I mean to say is that there's going to be time to react. And I really think that this, which is the SPY chart, if that 50-day SMA, it's not like you have to sell everything around. I think that
You're saying this is not the time to panic.
No, I don't. I think if you do that now, you're going to be like really sad about it. Like, honestly, I think that there are some high flyers. Like, I really do. Like, you know, things like I posted a SanDisk chart. I think that some of the storage names are probably extremely overdone. I think something like a Micron is probably extremely steep, probably one of the most at-risk charts out there, possibly, and due for a probably fair correction, even like a Western Digital, probably great companies. But these have yet to really come back. This does not look like Google, right? So something like this does not look like that Google chart that we were just looking at. These are above their 20-day simple moving averages. But when we say steep and uncorrected, this is the definition of steep and uncorrected, right? The SDNK. For whatever reason, some of these storage name ones are looking.
SanDisk, I could not believe that chart when I saw it yesterday. It's up 450% this year.
Yeah, I mean, it's
like,
we're not talking about like necessarily bad company or whatever like that, but you know, it's a company that was like, this is like super micro at the extreme highs kind of thing, steep and uncorrected. So, you know, it's been a good run. I think that something like this is something, if you've ridden this, these are the ones that if you try to, let's not try to press the highs on these guys right now, right? That's just, as I look at the charts, the most steep and uncorrected ones are these, for whatever reason, storage names. Not my Pure Storage. I like Pure Storage. But this is not steep and uncorrected, unfortunately. That's been corrected. And some of these ones that have come down, you don't want to press the shorts on them either. Maybe like your Oracle. The Oracle does not look like something that's going to be fun to short, because a lot of the move here has probably happened. And you'd be shorting what we would call the hole, right? And that's probably not a good idea either. So some look fine, some not so fine.
Guys, maybe we'll get Jason on later in the week. I know there's a bunch of, I'm sorry we didn't get to do our usual tickers. I really do got to go. Maybe like on Friday if you're free in the morning.
Now I'm on the side, so I'm not actually a bottom or a top anymore. Nice, don't worry.
They're going to give me so much shit for that analogy every time you're on now. That's just.
What was the analogy?
This whole double bottom nonsense. Like, No escaping it now. No escaping.
Happy birthday, big sis.
Happy, but dude, I didn't text her the whole day, so like she's probably wondering, like, did
Oh, dude, you're such a bad
help my
brother.
birthday? No, because I wanted to surprise her, so I want to surprise her. There's Jason's Twitter. Please make sure to check it out. He has a Discord, School of Gains. He does a lot of private training. If you really, really, really are interested in getting good at TA, that's his link. Paper
Trading.
games or TA trading, all that stuff.
Yeah.
Please make sure to check it out. Maybe we'll try to get him on like Friday, maybe at like 11, 11:30, 30, 45 minutes of some other TA.
Oh, in the live market?
Yeah, live market. So maybe Friday we'll get him back on again, and then we'll keep going from there.
We do check in.
Yeah.
Post non-farm payroll.
Oh yeah, we get payrolls on Thursday. Okay, there you go. That's important.
See what we got. All right, man.
All right.
Enjoy.
Thank you, everybody. I'll see you guys tomorrow on the Market Up.
Adios, guys.
Bye, everyone.
See ya.